Greetings, everyone, and welcome back to another episode of Plan B Success. Who we have with us today is Holly Williams from New York, and she's been a 25-year career executive in the advertising and market research industry. And after having been there, done that, she decided that was not the thing she wanted to do. She wanted to move on and do something different, so she pivoted into real estate and real estate investing. Part of it also had to do with, I think, trying to get retirement together. And we'll find out all about that from her. And now she's been very successful at what she does, and she's about to release a book on the subject as well. So welcome, Holly.
Thank you. It's so great to be here.
So why don't you tell us in your own words about your journey, 25, 35 years plus. What did you do and how did you get to where you are?
Sure. So I grew up in Houston, in a suburb of Houston, and did everything that you do in the suburbs, right? And grew up in a very nice, I was taught everything that you're supposed to do. So I went to college, I got a job. Few years later, I was in Dallas working, and I got an opportunity to come to New York to work in advertising and market research. And so I took that opportunity. I put the most in my 401k. I saved. I lived below my means. I did all the things that you're supposed to do and moved up the corporate ladder and built a really nice life. Met a man. I'm 6 years into this and got married. Now I have a 16-year-old daughter and all of that. And as I was living my life and very grateful for everything, I began to see the impact that paying 50% of everything that we made in taxes was having on our lives here. And then the second thing that happened, my parents got old, right? If you're lucky, you get to go through that, right? And in watching them in their retirement, because they did the same thing and they had everything in their 401k. And that's when I learned things like, the hard way, right? Through them, that you pay full income tax on that 401k when you withdraw it. I didn't think about that. I thought that it was tax-free. It was tax-free, right? But you don't even pay capital gains. You pay full income tax. Expenses don't go down when you retire, typically, unless you want to downsize and live in a little apartment and never go anywhere. Income taxes continue to go up. So I watched their savings go to the government for the most part. I watched the stock market go down, and even though they were in safe things, I saw that you have to withdraw the money to get the income. And so over time, watching this and then watching their fear and their anxiety, and are we going to make it? Are we going to have to lose our house? And fortunately, my brother and I were able to help a little bit. But all of those things got me really thinking that there had to be a better way. And along about that time, I knew about real estate. I had invested in real estate, but all of real estate is a lot of work. You're dealing with tenants, all of finding deals, managing them, all of that. And so it's hard to scale it and really, really make it profitable at the end of the day. And a friend of mine came to me one day and said that he was going to start buying apartment complexes, and he wanted me to help him with investing and finding investors and evaluating the deal. And so I did. And through the course of that, I learned about multifamily commercial real estate and how you can invest passively in apartment complexes. And I never knew you could. And the reason I never knew you could was because mostly the wealthy know about this. So that led me to, what else do the wealthy know about that I don't know about? And one thing led to another. And, what I've learned is that the 0.5%, the top wealthiest people in our country have access to many, 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 many different investment opportunities that the rest of us really don't. And that we put in the most money in our 401ks early in our careers, And when we take it out, we pay huge tax on it. And so there are many, many flaws in the typical, the rules that we live by, the rules that I was taught in business school, and the rules that I was taught by my family and television and my job, everything else. And so, I became very, very passionate about it. Since over the last 7 years, I've moved money from the stock market and invested in multifamily, and I've seen my net worth almost double and have a 6-figure tax deferred income from it. And I became more and more passionate about multifamily real estate than market research. And one thing led to another. And here I am.
So when you talk about passive investments into apartments, what do you mean?
Well, so what happens is you can go in and there's a general management, right, that finds the deal and does all of the work. But you really can't, at least I can't, buy a $50 million apartment complex myself, right? However, if I get my friends and family and others, to invest, then we all can together. And that's exactly what the hedge funds are doing. We put money in the bank account or whatever, and they take that and they invest in apartment complexes, right? And so, you really don't think about these many, many all over the country. There are these large garden style apartment complexes all over, and you don't really think about who owns them. And as a matter of fact, you could go in and ask the people that work there, hey, who owns this? And they'll tell you the name of the management company or whatever. So a lot of them don't know either, but who owns them are like A-Rod and Warren Buffett and hedge funds and real estate investment trusts, which are, a lot of people think that we're doing REITs, that I invest in REITs, but REITs are simply mutual funds that they go out and buy the apartment complex. They pay you a fraction of what's really happening, of what the income is really, and they take a lot of the profits, which I'm not opposed to anyone making money, but when we can avoid all of that, we're buying assets oftentimes from REITs and from hedge funds. And the average investor, the average person just doesn't realize that this is even possible and doesn't realize that the benefits of real estate investing in this country are huge. And that you have a thing called depreciation, for instance, and all of the expenses like the roof and the appliances and everything that makes up an apartment complex, you can write it off. And that depreciation often offsets the income that the asset is making. And so what happens is that you make part of the profits, right? And then you typically have a loss on paper. So you're making money, but you're really losing money. And then you can defer taxes. It offsets, I'm not a CPA. Just say that right now. I'm not a CPA. Talk to your CPA. But there are many, many, many. The government incentivizes us through our tax code to invest in businesses, and real estate is a really good business to invest in, I found out. And so it opened up a whole new world for me. And so led to me leaving my job, spreading the word. I find things that I want to invest in. I offer, I get to know my friends and family and people that I meet doing things like this and are able to offer them the same opportunities. So it's been a great thing, and we've changed lives, my life and others. It's been and help people really get a better place to live too. There's a lot to this that they just didn't get in the investing in stocks and mutual funds and annuities and the stomach churning stress that goes along with that.
So, one of the things that I've seen about you, especially on your website, and by the way, a great name, KeepMore, right? KeepMore of what you make. Right. So you talk about 3 things in terms of your investment strategy, which is, make sure that the principal is safe. make sure that it's followed up with a good enough cash flow, and then finally you look at any appreciation if at all it happens.
Right.
So you're very focused on the saving the actual principal, and then next a good cash flow. So when you talk about apartment buildings versus commercial investing, commercial real estate, is there a difference there in both? And is there a difference even from tax benefits standpoint?
Sure. So actually, apartment complexes are commercial real estate. And that puts you in, number one, a whole different thing than residential. So even to get a loan in commercial real estate, you have to have 30% down, for instance. They evaluate, the bank comes and spends 2 days at the property. I mean, making sure that they're not going to lend you money unless they're sure that you're going to pay that back. So there's a lot of things involved with commercial real estate. But what I love about multifamily is that you're less at the whim of the market. So if you think about think about losing money in real estate. And I've never met anyone that it's one of these three things. Either it's leverage, either they've gone in with not enough equity in the beginning. So all the bridge loans and 5% down, all of the things that got everybody in trouble in 2008 with the housing crisis. You can't do that. You just cannot do that if you want a conservative investment. You just can't. So the second thing is that you really have to have a loan product that you don't have to get out of at the wrong time. So if there's a business plan for the property, and this is a business, right? This is a business. This is executing a business plan. But if the business plan, if you've got a business plan for the property, that loan needs to be twice that. So that there's plenty of time. And if the market is down, such as now, right? The market is down. Actually, it's really interesting. Coronavirus is a whole other topic, but it's definitely not the market that it was a year ago. But what's happened is that the income, and then the third thing is cash flow. And people in the Northeast where I live most don't understand what that really means. They think revenue. They think, but cash flow is really what you have left at the end of the day. So the net operating income is what I'm talking about. And it's tough. You can't. I've never been able to cash flow anything in places like New York and LA. And in those markets, you buy for appreciation. And New York is in a lot of trouble right now. Property values have gone down, and people that were in the middle of construction or any of that, if you don't have enough resources to hang on till the market changes, then you're in trouble. With multifamily, it's cash flowing before we ever even take over. Then we've got 30% equity going in. We've underwritten for a very conservative, outlook in rent increases. And so it's really slow and steady. We go in, and when someone moves out, we renovate the property, and we really focus on Class B, B plus and A minus type of properties. What I mean by that these are working Americans. These are people. The project that we just finished, we just closed last week in Charlotte, right outside of Charlotte. Actually, is the average income is $84,000. It's 5 minutes from the Lowe's headquarters, Lowe's Home Improvement, the white collar jobs there. And then NASCAR is headquartered nearby, and there's a medical center headquartered nearby. So probably 80% of the tenant base are white collar, young families or people out of school, and then there's another 20 or 30% that are retirees, believe it or not, because people are flocking down there. It's near Lake Norman, which is a suburb of Charlotte. And so we look at demographics. We look at, I love Texas. I love the Carolinas, Jacksonville, Florida. We have a property there that's amazing. It's not touristy. When you think of Florida, you think of Orlando, or you think of Miami, or you think of Sarasota. You don't really think of Jacksonville as like the big tourist mecca. And it's a big, the military's doing well. There's industry there. And these are places too that are further along in the coronavirus. And there's also, they're paying the rent. You hear a lot about rent collection and all of that, and a lot of it's cultural, a lot of it's just, the type of tenant. Our tenants have some safety nets, and that's the challenge with everybody thinks, when I make real estate investing, I take a house that's really, really, really in bad shape and I fix it up and all of that's very risky. And this is much less risk because if you lose a tenant and you've got 100, 200, 300, 400, 500 apartments, it's much less of a problem than if you lose a tenant with a single family home. Mm-hmm. Yet you can invest passively and get the benefits of the tax benefits of real estate and the income benefits of real estate.
So when I mentioned commercial, I was more alluding towards strip malls or old bank buildings and that kind of stuff. Have you invested in any of those, or do you keep away from them? Okay.
I have not, and the reason is, and that was a long-winded way, but it's really about not depending on the market. Retail goes up and down. Office, we don't know. There's so many unknowns.
Right. Homes, people need to stay.
Exactly.
All right.
This is food, shelter, and clothing. When things get tough, Procter & Gamble's doing okay. They make the toilet paper that we all need.
Right.
You're not gonna. It's not an angel investing stock that you're probably gonna change your life. But if you have a lot of Procter & Gamble stock, you're not going to lose too badly.
So how does this work? On the one end, you're out there finding these
Correct.
opportunities to invest. On the other end, are you looking at finding investors too?
Correct. And it takes a village to do one of these projects, right? If you're going to avoid the institutional money. Mm-hmm. So what happens is a hedge fund will come in and say, well, you don't need to raise $20 million. We'll just give it to you. But we want this, that, and the other thing. And then you're back to do it. My investors have to have, usually the hedge funds have at least a $250,000 minimum investment that you need to make. You usually have to have a very, very high double digit, if not triple digit net worth mm-hmm. to participate. So what we do is we go in and we purchase the property, and we offer to mostly accredited investors. We can get into that if you want to, but mostly accredited investors can invest $100,000, $50,000, and participate in the same type of institutional quality multifamily apartment assets mm-hmm. without having to and keep the money. Basically, we're friends that all get together and we buy an apartment complex, whereas a basic fee that the general partners might make for acquiring the asset is around 3% probably, and the average REIT, the average commercially traded real estate investment trust, is 9%. That's average. So that's mm-hmm. the difference. That's what's happening. And so what we've been able to do is because we share the wealth, it's been a really amazing, eye-opening thing. And that is what happens with the super, super wealthy is, Warren Buffett is really smart and he's a really nice guy and he's not lying, right? He tells you his tax rates are lower. He tells mm-hmm. you all this. He's not logging into his E-Trade account or whatever and buying stocks. That's not how he's doing it. And that's not how the wealthy invest in real estate. That's not how the wealthy are investing in the stock market. And we just need to know that and understand that. It doesn't mean that the stock market's bad. It doesn't mm-hmm. mean that a financial advisor is bad. It just means that you just need to understand the tremendous amount of fees that you're paying for something that you can do once you get to a certain level of sophistication. The opportunities are there. without being super, super wealthy. Only we don't know that because I grew up filling out the 1040 easy, right?
Yeah.
People who grow up wealthy, this is what they do. This is what they do. And so it's been quite the ride with people thinking that it's a scam, it's too good to be true. We're very, very, very hardwired to think about investing in one way.
So can you, for the benefit of the listeners, just talk about what is an accredited investor?
Sure. So it's it's not very complicated. It's one of those things. Every time somebody makes a law, there's always usually a downside to that law also. So to protect people, they said, the SEC, the Securities and Exchange Commission, has a rule that you need to have a certain net worth. It's based on net worth. Now, whether that's right or wrong is up to everybody else to decide. But if you make $200,000 a year, your family makes $300,000 for a household. You're an accredited investor. So most people that are, into their careers, pretty far into their careers, live in a big major city where you can't cash flow. It's much harder to cash flow in New York and LA and even Northern Virginia, although it's a lot better where you are. It's the bar is not huge, but I was an accredited investor and had no idea what that even was. Mm-hmm. And I all the time run into, because we don't know, you can't advertise these. I can't go out and just tell everybody. I have to know you.
Right.
So, they put there's a good reason for that, but there's also a lot of collateral damage that goes along with it.
So once you acquire an investment property, do you put a management company to oversee it? Is that how you run it?
We absolutely do, so it's a team, and I work with the top syndication teams in the business entrepreneur side of this, and so we've got people, on the ground that are there managing the management company, and we can make little changes. So if you go in and think about it, so the first project we did was in Houston many years ago in 2015, and we went down there and there was a waiting list. Every apartment had a washer dryer connection or whatever, but there was a waiting list for washers and dryers because these were people that whatever reason, either they were there for a shorter period of time or they just didn't want to fool with it or they couldn't afford to go out and spend $1,500 at one pop to get a washer and dryer. They would there was a waiting list for $50 a month for a washer and dryer. Well, you can get a washer dryer and that pays for itself. You can lease them for $15 or $20 a month and the tenant will pay $50. So there's all kinds of things. You multiply that times 100, 200, 300, and you've increased that net operating income by a tremendous amount. So commercial real estate is valued on net operating income.
Right.
That is how the value. So with a single family residential home, it's valued based on comps. So what everything else is selling for in the neighborhood. Net operating income is what the value of commercial real estate is based on. It's really how much money you make with it. Because people that buy commercial properties are looking, it's a business. And so they're wanting to know how much money can I make with this? And so it's a different economic model that people often don't realize as well.
Right. So I'm going to take you off on a tangent here. So when you actually got into advertising and market research, how did you end up there? Was it by chance or was it a passion to get into that industry?
Well, I studied it in school, and I've always been fascinated by people and patterns. And, I say the stock market, but I don't mind the stock market either because that's patterns also. But what I love about real estate and what I love about market research is understanding what people are doing, what drives people to do what they do, what their preferences are, and how can we listen to people and make things better for people. So at the end of the day, we're doing that. I used to help brands like Procter and Gamble, service their customers better by learning what their customers wanted and what they didn't want. Well, and did the ad speak to them? We tested advertising and that sort of thing. What we're doing here is we look at where people are going, and you look at just the trends in America, and 900,000 families, have left New York State annually for the past 3, 4, 5 years. I mean, this is a fact. It's not coronavirus. It's not something that has just happened that New York State is broke. They've been broke for a long time. And so people are moving, and where are they going? Well, they're going to Texas, they're going to Florida, they're going to the Carolinas, and they're leaving LA, they're leaving these high tax states, and it's a fact. And businesses are doing that as well. And so what you want, I mean, if you think about the businesses that are headquartered now in New York State, there's not many relative to what it was. I mean, and you can call me and I'll show you the hard data, right? So I'm fascinated by that. And, there is a housing shortage in a lot of these places, and people that are in the bubble that I live in New York City, don't necessarily know all this.
Right.
They don't understand, because the news media for everything, I think we can all agree on this. On everything, if it's not a horrible, sad, awful story, they're just not, the chances of them reporting it are very slim. And so, you don't realize how many companies have moved their headquarters in the last 5 years to these states where we're buying apartment complexes, and people need a place to live. So that's what we look for. We look for diverse industries. So not one single industry like automotive or oil or whatever, a diversity of industries, and really, really population growth, and places that people want to live and that are tenant friendly, right? I mean, also the same states, coincidentally, that people are leaving are also the states where they're really not very, very landlord friendly. I mean, not tenant friendly, but landlord friendly. It's very hard to do business in a lot of places, and it's very much easier to do business in places like Texas, and we can make it a better place too.
So, the reason I asked you that is you were in a different field. You learned as a result of, several years of your work experience that there's a better way to do things.
Correct.
Better things for yourself to do, right?
Right.
And today we have this, I think one of the prevalent issues out there that's been going on for a while is with the youngsters, should they get a college education or not? There's a lot of them that think they don't need to go to college and can get into a job directly. That's one part of it. There's also this other debate about the education system, whatever it's teaching kids today. Is it the right thing? Because obviously it's not, because we spend, a career or half a career in doing something before we realize we're not making ends meet and we need to do something different. What's your take on that?
Yeah, it's interesting because I have a 16-year-old that's looking at colleges, and, we're really trying to make sure that she knows all the sides of the story. You're right. In our education system, we're not teaching kids to think critically. We're not teaching them about personal finance at all. And there are many, many reasons for that. I think that there's a couple of things. And the biggest thing that I think that you need to know is you need to know how the world works. And the way to find out how the world works is to go get in the world, right? But you need to understand that everything needs a filter, right? And you really need to understand where everyone is coming from. I mean, it's fine for people to make money, but you can make this whole thing a win-win. And that's where mentality comes in. And that's the real thing that I think the wealthy, if you think, look at people win the lottery, right? And they're 5 years later, they're broke, well, how does that happen? Right?
Yeah.
And people are wealthy and something happens, they lose everything, and 5 years later they're wealthy again. And so it can't be just how flip in the wind blowing, how it all just total luck, right? There's something to it. And I think that what's to it is that the wealthy have this attitude and this mindset of abundance. And just because you're getting rich doesn't mean that you're taking it from me. As a matter of fact, most wealthy people, if you listen to them, they'll help you, right? Mm-hmm. So I think that we're not teaching our kids to be open to other things. We're creating workers in our schools, and that's what we're creating, are workers. And so I think you need to understand that, and the best way to understand it is to go be a worker, right, for just a little while. Just a little while. So I think I'm a pro-education person, but I'm a pro-critical education person.
Absolutely.
That the bigger part of it is learning how to maneuver in the world. Like I'm working with my daughter now. The big thing is, it's not the schoolwork. It's, you need to call the teacher and you need to see how you need to ask her what you need to do to make the A, and how are you doing, and those kinds of skills you learn in school. And it's the same thing. I call my investors. How are things going? I mean, I know how most of them are doing with their families during the coronavirus, and how can I help, and what can I do, and are you out of a job? I mean, all of those things. So a lot of the socialization is very, very, very important. And if you don't learn how to maneuver in the world, and you don't know how the world works, it's very difficult to navigate.
Absolutely.
But our schools are not teaching us the whole thing, which is another reason why I wrote this book and why I'm on this podcast and why you have the podcast, probably.
Yeah, tell us about your book.
So the book is called Hidden Investing, What the Wealthiest 1% Know That We Don't. And, it's very simple. It's not a long book. It's not a complicated book. It goes through 10 investing myths, common myths, like your 401k, what I talked about just a minute ago. And then what the wealthy believe about the 401k. It's not that 401ks are bad. It's not that you shouldn't do it. It's just that you need to understand what it is and what it's not. And the one of the chapters is titled "The Air is Safe at Ground Zero," right? The experts don't always know either, right? So, and we're seeing that with coronavirus. Should we wear a mask? Should we not wear a mask? How does it transmit? Has it? I mean, you really have to filter information. And just because they're an expert does not mean that they're right 100% all the time. And so you need to take in information from all different places, and we don't learn how to do that in school either. Just because the people that are telling us, I'm sorry, but the people that are telling us, every one of them, think about the people that are telling us right now, we're on lockdown in New York, right? I just will say that every one of them that's telling us to stay home has their job, they're getting paid, everything is hunky-dory, seriously. Now, so I think that there are lots of business owners that realize we've got to have some sort of, the whole country realize we've got to have some sort of a calculated risk thing going on here, because people are losing their livelihoods and they're losing, they're not getting medical tests that they need. They're not getting their teeth cleaned. They're not getting, there are these things that just don't make sense that are going to cause long-term damage to this country if we don't figure out how to get out there and start the economy again. And so the truth is always somewhere in between.
So where can people find you if they want to learn more about this passive investing strategies, or if there are other people that want to probably get on the bandwagon with you to discuss their investments? And where do we find your book?
Sure. So my book is at hiddeninvesting.com. It'll be out in a couple of weeks, God willing. It will, my website is KeepMore.com. I'm Holly at KeepMore.com. Whatever we can do to help, and however we can spread the word and help people, learn that critical thinking and be aware of what's happening and what we're being told and taught, that it's just not the whole story. And it's a good thing the more we can do that.
Holly, this has been great listening to you and learning from you about the real estate field. One takeaway for the listeners that you would like to leave with them?
I think that the universe, I really believe this. If you think about every single thing that has, the universe grows, it expands. I go to my hometown in Houston, and it used to be one loop. Now there's like 3 around the town, city. So there's roads and freeways that I don't even know where they go. And so that's the universal law, the universal truth. So whatever's happening now, it's going to recover, and we're going to come back stronger, but it's going to happen again too. We're in an interesting time in our country. And I have come to believe, and I believe that most of the 1% believe this too, that every single time a crisis occurs and a down economy occurs, it comes back stronger than ever. It's a universal law that the universe expands and we get stronger. We are going to come through this coronavirus. There's no question. And I've been saying for the last 2 or 3 years that it was going to go down, and we've planned for this. We didn't plan for a pandemic, but we planned that there would be a recession. We're going to come back stronger than ever, but we're also going to crash again. And I don't know when it'll be. The average is like 7 to 10 years. Something happens and we go down. So if you're, the stock market, especially, it's going to go down. It goes up and down, but it is going. And when it goes down fast, it goes down fast. And it happens. It will happen. And if you're retired or nearing retirement, and you don't have the time to make it up, you're in trouble. So that's why the wealthy have a whole lot of cash flowing asset based investments in addition to what they're doing everywhere else. So,
all right.
I think we have a happy outlook ahead.
Absolutely. I think so too. It's just it's a matter of cycles, right? They're going up and down, and this one was due for a while. Obviously, we didn't expect a pandemic. We knew there was going to be a downturn. We were waiting on it. 10-year cycles is what I've heard of. So 8 to 18, 19 comes along, 20 comes along, nothing's happening. Well, here you go, the big one.
That's right, and we knew it, and we were going to come back stronger. And along with this, there are opportunities are developed. Look at Amazon. I mean, this really proved out their business model. The Gulf War, CNN. That's how CNN got started. It was in the Gulf War.
Right.
So there's lots of things that we could go on, and I could talk to you for a long time. But this has been great.
Yeah, absolutely. Thank you so much for joining us today. It's been great listening to you, learning from you, and I'm sure a lot of the listeners will be back in touch to learn more. And I look forward to reading the book.
Thank you. Talk soon.
Thank you. Hey, I hope you liked that episode. Please do make sure to subscribe to Plan B Success Podcast so that you can get alerts about these episodes coming out 3 times a week. You get to hear an inspiring interview and some inspiring talk that will move the needle for you on your way to success. Thank you very much.